Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly podcast. Today's date is the 13th of April. Let's dive into the week's top market news. Navigating European markets. Equity rallies contrast with emerging macroeconomic headwinds. The European stock market recorded a broadly positive weekly performance, partially supported by a temporary easing of global geopolitical tensions. The Pan-European Stocks Europe 600 index ended the week up 3.05% in local currency terms. Financial markets experienced a notable rally on Tuesday, following news of an agreement for a two-week ceasefire between the United States and Iran. Among the major continental indices, Germany's DAX closed with a 2.74% gain. Italy's FTSE/MIB showed a strong increase of 4.35%, and France's CAC 40 climbed 3.73%. In the United Kingdom, the FTSE 100 index also posted a 1.57% advance. It is worth noting that overall trading volumes were impacted by the closure of regional financial centers on Easter Monday. Despite the recent optimism in equity markets, clear signals of caution are emerging on the macroeconomic front from European institutions. European Union Economy Commissioner Valdis Dombrovskis forewarned that the EU is preparing to downwardly revise its official growth forecasts for 2026 in May. This revision is primarily driven by the risk of a stagflationary shock, a phenomenon triggered by the pernicious combination of sluggish economic growth and rising inflation. Dombrovskis specified that the current war environment could shave 0.4% off the EU's economic growth for the current year, even assuming a short-lived conflict. Furthermore, he warned that more substantial geopolitical and energy disturbances could reduce the region's gross domestic product growth rate by up to 0.6%. Concurrently, industrial data originating from Germany display a positive trend but fall short of consensus estimates. In February, German factory orders rose by 0.9% on a month-over-month basis, a significantly more contained increase compared to the 2% growth anticipated by analysts. This uptick was primarily driven by gains in the automotive, textile, and metal production and processing sectors. Analyzing the underlying components reveals that a robust expansion in foreign orders managed to offset and surpass the decline registered in domestic demand. In the tertiary sector, the major Eurozone economies are exhibiting a concerning slowdown. In France, services activity contracted again in March 2026, with the S&P Global France Services PMI falling to 48.8, a level below the 49.6 recorded in February. Values below 50 indicate contraction. New business volumes proved particularly weak, hampered by slower client spending ahead of local elections and broad uncertainty surrounding the Middle East conflict. A similar picture emerges in Italy, where the services sector unexpectedly slipped into contractionary territory in March, penalized by soft demand and mounting international uncertainties. Finally, the British real estate market is also showing evident signs of weakening. According to data provided by the widely watched Halifax House Price Index, UK house prices grew by 0.8% year-over-year in March 2026. This dynamic is lower than both the 1.5% growth pace previously estimated by the market and the 1.2% increase registered in February. Now our insight into alternative markets. The integration of artificial intelligence as a value lever in private equity. At THUB Capital, our mandate is to identify and capitalize on the structural changes that are redefining financial markets. while simultaneously protecting your capital through rigorous risk management. Analyzing recent dynamics in the private equity landscape and mergers and acquisitions, M&A, transactions, a highly clear investment paradigm emerges that we are actively integrating into our allocation strategies. An illuminating case study, recently highlighted in a March 2026 PE Hub report, is the merger orchestrated by Motive Partners between Alchilist, a Dublin-based fund administrator, and Lyra Client Solutions, a technology spin-out from Apollo. This agreement is not simply a sector transaction, but represents a manifesto on the optimal investment methods in today's technological context. From this and similar market operations, we have distilled some fundamental guidelines that drive our approach. Searching for recurring cash flows in stagnant sectors. The first pillar of our strategy consists of identifying market segments that benefit from long-term contracts and highly predictable, recurring cash flows. However, the true return potential is unlocked when these sectors exhibit a historical lack of technological innovation. This stagnation creates fertile ground for the injection of targeted capital, where innovation is not just a marginal improvement, but a true disruptive factor capable of rapidly capturing market share from traditional operators, who are often weighed down by obsolete IT systems. Technological arbitrage through artificial intelligence. The second guideline involves the strategic use of artificial intelligence, specifically agentic AI, as a tool for operating leverage. In sectors characterized by high data density and repetitive processes, AI integration is not mere technological speculation, but a measurable catalyst for cost efficiency. We invest in entities that utilize technology to scale operations without a proportional increase in fixed costs. Data processing speed and responsiveness thus become the primary competitive advantage, allowing for operating margins significantly above the industry average. Risk mitigation through commercial credibility. The third fundamental principle concerns balance sheet risk management, which is particularly critical for newly formed entities or platforms born from recent mergers. THUB Capital's approach favors companies that manage to quickly secure anchor clients of the highest institutional profile, as demonstrated by the acquisition of a client of Apollo's caliber in the Alchilist Lyra case. The presence of partners of this magnitude provides immediate certainty regarding revenues and neutralizes standard market concerns about financial solidity. This foundational credibility is the necessary prerequisite to successfully expand services on a global scale and attract further institutional clientele. In summary, our investment philosophy is positioned exactly at the intersection of the security of traditional revenues and the acceleration offered by new technologies. We will continue to monitor the markets to identify those M&A operations that do not merely add two balance sheets together, but multiply value through the rapid adoption of artificial intelligence and the solid support of top-tier industry partners.
Thank you for listening to this episode of T-Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.